Hey everyone, it's Luran Morrison here and welcome back to my channel. Guys, in today's video I'll be looking at three stocks: Draftking, Tesla, and Snow. Now if you're someone that is trading options or trading the regular stocks, you certainly don't want to miss this video, because in today's video I'll be touching on the technical analysis, and I'll be touching also briefly on the fundamental analysis that's driving my trading decisions. Now these stocks are sitting at key technical levels. Some of them are experiencing earnings in the coming week. I think Snows have earnings next week. So I want to show you some of the key levels you want to pay attention to during the earnings call. So without further ado, guys, we'll jump right into the charts. Before I do so, all I ask in return for you guys is to do is smash that like button so we can help the channel grow, we can help with the algorithm. And also, if you're new to the channel, remember to subscribe so you can be notified for all future videos. So without further ado, let's jump right into it, guys. All right, so the first one that we'll be looking at, guys, is Draftking. Now, as you guys know, Draftking is one of the premier online betting companies, and there's certainly great attention being paid to this stock right now. Now the stock is sold off, as you can see here, recently from March all the way to currently it's down 44% in the past 53 days. So this is a key level. If you look at the RSI indicator here, guys, this stock went as low as 20 on the RSI, which is ridiculous levels. I certainly took some position on this one. I think I took 2 months option contract for it to get back to about that $52 level. So this, as you can see here, we have some consolidation going on right now in the past 6-8 days, and this is showing that the stock is bottoming out, and in addition with the RSI tells me that this stock has found a bottom. Now these growth stocks, most of the times they're trying to form a wedge. As you can see here, I already got the shape of a wedge here. Also calculated the angle of this one already to see what the potential recovery angle will be. So this is what we're looking at. Like I said, you still have a good entry time. This line at the bottom here is certainly your risk. So if you decide to take a position anytime next week, you want to monitor this line that I drew right here. If the stock breaks below this line, you certainly want to exit, because it means that there's potentially more downside and the overall market is probably going lower. However, the intention is that this stock will stay above this line. It'll probably consolidate some more, I would say, in the next 2 months, and then we can see a break to the upside for DraftKings, because like I said, this stock has a lot of attention. A lot of investors are buying this one up, and you certainly want to be on the same side with the institutional investors, the big banks, and the hedge funds that are buying these stocks up. So like, again, this was one of the lowest the RSI have been for this stock in its entire history. So that's something you certainly want to pay attention to. So that's it for DraftKings. You still have good opportunity to enter this stock right now. So and I show you guys anywhere you can enter here. Your risk is this line. It gets below here and close below, you want to get out and wait for it to, you know, maybe fall, consolidate again, and then move higher. But this looks to be, in my opinion, the bottom. And then we have Tesla, guys. As you guys know, I trade Tesla a lot. Tesla is in a huge wedge formation as well. We have the key resistance level or line already drawn, or the angle. And as you can see, Tesla came down. It came very low here just last week to the 550 level. Now Tesla has a level of 540 as the key. You see this last candle here, guys, this tail. If Tesla should break this level, then we're going all the way down to about 400 if Tesla should break that 540 level. I don't believe it'll break that 540 level. I think the stock has seen enough pullback. Because look here, we got from January 25th all the way here, we're looking at 40% drop. Now this stock still has a lot of momentum. There's still a lot of investors very much interested in buying this stock up. So you certainly want to be following the money. If we look at the RSI as well, we can see 27, 26 RSI back over here. Currently last week also we had a 30 on the RSI, which is pretty low. And it is, like I said, it hasn't broke this key levels yet. If this key level is broken and it closes below this level, like I said, we're looking at, there's a gap here to fill right between 400 and 440. There's a gap right in here from back in November that needs to get filled. So that's what will happen. The stock will come down, fill this gap, and this might be the bottom before it starts any recovery. But that's worst case scenario. The scenario that I'm looking at right now, and I'm not trading Tesla right now. What I'm doing, I'm watching Tesla. Like I said, this is the calculated angle for recovery. I expect Tesla to consolidate in here all the way to about late June and then break out of this wedge formation. As you can see here, we had a wedge before and it broke down the wedge. Now we have the same angle transferred here, and we expect Tesla to consolidate, like I said, for the next month and a half. Comes here and breaks out to the upside, and we can look at 760 or 800 as the next key levels for Tesla. So that's what I'm looking at right now. If you want to take an entry position, a small position, you can do so. But this stock will actually have to kiss this line again sometime late June before it breaks out to the upside. That's it for Tesla, guys. I show you guys entry levels, I show you guys risk levels, and I show you guys target price levels once Tesla decides to break out. And then we have Snow, guys. This is a big one as well. As you guys know, this stock IPO'd back in September of last year and did a lot of consolidation, had a big breakout to the upside to the 430 level. Now it broke down to 187. Let's look at the percentage breakdown we're talking about here. 56%, guys. 57. That's insane. Now this stock has earnings coming up just next week on the 27th, I believe. And if we see a spike in this stock, let's say a gap up when the stock announces earnings, you want to buy, you want to short this stock because it'll, like I said, this is my calculated the angle for the recovery in the wedge formation. But if this gaps up on earnings, expect it to wash right back down, and it'll consolidate within here in the next 1 to 2 months before we can see a breakout to the upside. But I already did a starter position right here at the bottom. That was a couple of weeks ago for this stock. My risk level is this line. If it breaks below this line and closes below, I'm out because it means that there's further breakdown. But I find it hard to see that happening unless the overall market continues to slide further. So that's what we're looking at on Snow. Remember, if it gaps up on earnings, you want to short it back to this level or even the 220 level. You want to buy puts if you're trading options. And if you're trading just the stock, you can just short this thing back down to the bottom. So that's it in a nutshell of the 3 stocks that I wanted to review for you guys today. We talk about Draftking. We show you guys the entry, exits, your profit target levels. We do it for Draftking, Tesla, and also Snow. So I'll wrap this video up, guys, and I hope you guys found this video interesting. If I did so, I did earn your thumbs up. Smash that like button. You're new to the channel, remember to subscribe. And until next time, we'll talk later, guys. Have a good one.